Right after the financial crisis, we started to chart central bank balance sheets and just how big they were. This chart has evolved into what I think is just a work of absolute beauty. If you check it out, the BOJ's balance sheet here in red, the ECB in blue, and the Fed in the U.S., you can see the growth since 2008. It's just come off a little bit. Are we set to get back to all-time highs?
I think we're certainly on track to test those highs again. The Fed, there's a big debate about whether the Fed are technically doing QE. Does this count as QE or not? But they're certainly expanding their balance sheet and putting liquidity into the market. And they're soaking up bonds or bills that would otherwise, had to be, there's an opportunity cost for the private sector buying those bills that the Fed are now buying. So there is some form of stimulus in there. And clearly the ECB are pretty explicit in being in the market, both on the private side in credit and in rates for a very extended period. They've said they're not going to stop this policy until they hit their inflation target. So we're in a QE world again after 2018 being really the first year in many that we've seen that rate of purchases turn actually negative. And this is a big deal for risk assets. It's been the primary driver, not just on the QE side, but the global monetary policy regime for markets in 2019. Not only do we have the big three major central banks doing QE and cutting interest rates, but we also have many other central banks globally lowering interest rates in the most synchronous easing sizing that we've had in the past 10 years. So we have over 60% or so of the global central bank universe cutting interest rates this year. So that's really been the primary driver. We think it's still, whilst probably most of it's behind us, we think it's still here to stay. And it's a supportive environment for risk assets.
Well, the loosening may be behind us, but the buying seems to just continue. Is this not a QE world, but an MMT world? I mean, are they enabling more and more government spending?
That's certainly the ECB's line of attack, if you like. They've essentially said, well, Draghi in his last press conference, in a little bit of a kind of drop the mic approach, said, look, we put ultra low rates, borrow for free for an extended period in place. Now it's up to the policymakers to do something more aggressive on the fiscal side. The big question in Europe is whether you can get the political unity to actually deliver that. But in other places as well, we saw some fiscal easing out of Japan earlier in the week be put into place. We're seeing ongoing fiscal easing in China. So there is sort of a modest fiscal impulse coming in various different parts of the world. And a function of that is the fact that you've got wealth inequality at multi-year highs and interest rates at multi-year lows. So it does look like the next natural policy option should be on the fiscal side.